is super safe, high equity, low debt, or no debt. It's my niche. And I feel really comfortable with it.
Mm-hmm.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
So why do you think that, or maybe you disagree with this statement, or is it property one good vehicle in order to become wealthy, or can you share the good, the bad, or the ugly of this vehicle to create wealth?
Well, first of all, I love real estate. So I'm a property person. That is my passion. That's where I had my mentorship. That's where I learned, and I'm still doing it. But I don't think it's necessarily the best way to make the money that you want or need for your life. I think it's important to be diversified into different area investment. So I believe in real estate quite a bit, and I believe in the way that we do it is different than the way anyone else does because we have little or no debt because of what I went through in 2008. We buy buildings and we have 20 or 30 or 50 investors in a deal, and they join me because they like the safety of my kind of investment, which is the primarily debt-free or maybe a 20 or 30% loan to value ratio with a very, very small mortgage. But I'm not recommending that everybody do what I do. I'm saying that everyone should
Sound to
have,
me, you that have very good cash flow, right?
yeah, very good cash flow, because if the bank doesn't get much or there's no bank, there's a lot of cash flow. We have, it makes it easier to feel safe and sleep at night to not have the bank breathing down our neck.
Oh, yeah.
So I'll give you one example. We bought a building about 5 months ago in a little industrial park in a town here in the Chicago area, west of O'Hare Airport, that's called Carroll Stream. And we bought a 10,000 square foot building, and the building is occupied by a company called Topcon, Topcon. And they make and distribute and rent out products for people who do surveying, people who build roads, people who build sidewalks, who build buildings. Everybody needs a survey because you have to know from one point to another what the slope is of the ground, what the slope is of the water coming off of the stormwater coming off of the roof going into the parking lot. So Topcon is a company that's a division of a Japanese company on the Tokyo Stock Exchange. It's a very large business. And we bought the building for $1.5 million, and we raised all the money from 30 people. Some people put in 250,000 and some people put in 25,000.
Wow.
And no bank, and the return on this deal is 7.5%. So if somebody puts 100,000 in, they get $7,500 a year. But also, theoretically, the value goes up by owning it long term. So we buy these things and we own them. And every year in our leases, the rent goes up a little bit. So next year, the return might be 7.7%. And the year after that, it might be 7.9 and then 8.2. And eventually, when we own them for 10 or 12 years, the returns are up around 9 or 10%. And the great tenant, now the tenant can leave. We said we have standalone buildings. A tenant can leave. But if it's vacant for a little while, we're okay because we don't owe the bank any money, and we can go through a period of 3 or 4 months until we get a new tenant without having rent coming in and still survive without any kind of threat. Although if you owed money to a bank, the bank would be saying, what are you going to do? You've got a vacancy. You've got to pay us. What happens if it's longer? So I like.
And if it takes longer, they can take away the building, no?
Right. If the biggest problem with banks is they can foreclose.
Yeah.
You have no bank, they cannot foreclose because there's
Absolutely.
so it's a different way of looking at it. But I think people shouldn't put all their money with me. They should put it into other things. And I don't think everyone should only be in real estate. Someone once told me many years ago, you should have stocks and you should have bonds and you should have some other alternative investments. Real estate is not the only thing out there just because that's what you do. And I agree with that. I don't think anyone should have all their money with me, but people really like safe investments for part of their portfolio.
Mm-hmm.
It's not quite the same as a government bond. A government bond, if you have a US Treasury note, chances are pretty darn good that the United States will pay that note. But it only pays 4% and it doesn't ever go up in value. So if someone can average 8% in a real estate deal where there's no debt and it's unlikely to lose your money, that's what we call alpha. It's the difference between what you can get safely and what you can get as a return in a piece of property without the risk of losing your money like right around the corner. We like that.
I mean, it's
It's
backed by the asset, right?
backed by the asset, right? The
Mm-hmm.
asset, and if there's a problem leasing it, we can always sell it.
Mm-hmm. And
And
everybody gets the money, right?
right, and if the market goes bad and we can't sell it for as much as we bought it for, by having no debt or very little debt, you lose very little money. If you lose
Mm-hmm.
10% on
Mm-hmm.
an all cash deal, you lose 10%. If you
Mm.
could buy a stock and you knew that you could buy that stock at it would never go below 85 or 90, but there was all kinds of upside, and while you own it, you're getting a dividend. That's hard to say no to. But if you have debt, let's say you have a 75% loan on $1.5 million deal. So you owe the bank approximately $1,200,000 and you have 300,000 of equity. If you lose that same 10 or 15% of the value of the building that cost $1.5 million, you lose 200,000. You're losing 200,000 of your $300,000 investment. So you're losing 65 to 70% of what you put in because of the bank, because you have to pay them no matter what. So our approach is limit the downside, have good upside, and invest in other things besides this. I don't mind someone taking a lot of risk in the property business, but I won't do it. It's not good for me. It's not good for my niche. My niche is super safe, high equity, low debt, or no debt. It's my niche. And I feel really comfortable with it.
Mm-hmm.
And people who know
And the
me,
investors that invested in this project, they are also comfortable with that.
yeah. Yeah, I have one investor that just joined me. He just met me. He saw me on LinkedIn. He called me up. He said, I've never heard of anybody who does little or no debt. I've never heard of that. So I'd like to join you and I'll put in 300,000, which for me, he said, is an important amount of money. He said, but the first thing I'm going to do before I do that is I'm going to tell my wife about this because I'm not just going to invest it and then tell her I did it. I want her permission. Does that make sense?
Wow, fantastic! That's brilliant. So, Joy,
Yeah.
we talk about. For me, I'm grateful about property. Everything. I say this is where all started, and the wonderful life that I have. Mainly, um, is um, is because of my property business, right? This is running this business. I learned few lessons like huge breakthroughs like you can make in a day the same amount of money that people can make in a month. And you have employees and people work and so things that sounds impossible in the real world. And then even becoming an investor, what is even more spectacular because the money goes and work for you, rather than you change your time for money. So the dynamic change because money doesn't get tired. It doesn't need to arrive. It works 24/7.
Yeah, but I have one more thing that I want to mention about safety in real estate. I don't know if you feel this way, but I believe it's important to have a specialty and know a particular part of the market or a market niche. And so I believe that our niche of doing nothing but industrial real estate, not only that, doing nothing but smaller buildings, not the big, gigantic buildings, smaller ones, and also doing them in one location where I know the location extremely well, where we just are buying a building in a town here called Wooddale. And I have summer interns working for me this summer. And I went out to Wooddale with them. There's 202 buildings. And I divided Wooddale into 4 sections. So there'd be 50 buildings per section. And each of the interns was responsible for going door to door in the industrial park, learning who owns each building, who the tenants are, how big they are, how they're laid out. We have a rating system where we rate buildings on a scale of 1 to 100, and we take off from the 100 for various things that are wrong with the building. And I trained them, because I'm their mentor, how to analyze the number that a building would be assigned based on that 1 to 100. I'll buy a building if it's a 90 or greater. But if it's a building that's under 90, I don't want it. It will cause trouble in the future. Something's wrong.
Absolutely. So, Joel, if someone is in love with this conversation and want to learn more from you, how people can find you, how this process works?
Well, we have a website called britproperties.com, BRIT, which you and I discussed. Doesn't mean we're British. It's named after the property manager that works in property management who started with us, whose name is Brad. Stands for Brad really is terrific. Brit. He was when we started the business many years ago, he was the first property manager. And so I decided to name the company after how great he was. So britproperties.com. And we're very specialized, extremely specialized.
Okay. Thank you so much, Joel. And for all of you following the broadcast, see you in our next episode of Unstoppable, how brave entrepreneurs like Joel break the wall and achieve the first million. Bye for now.